Coming up on this episode.
What is Forex trading?
Import, exports kind of trade. Mm-hmm. You want to trade with another country which has a different currency, so the settlement is a different currency compared to your home currency.
60% of the people, retailers, who participate in this market lose more money than they make.
Leverage is a key risk.
Maybe you can just sort of explain, how does it work?
When you're trading in the foreign exchange market, you can actually trade with more money than you actually have.
Given all those dynamics and what's happening with the markets and interest rates in the US going up and elections in Kenya, what would you recommend?
We don't see inflation being a major concern.
Hi there everyone, I hope you are doing great. Guys, did you know that the Forex market is the largest financial market in the entire world? And Kenya ranks third in Africa in Forex trading. I mean, this is a segment or an asset class we cannot ignore. And today we'll be looking at Forex trading. What is it? How can you participate in it? Is it even worth investing in? And I have with me a fantastic guest. But before I introduce him, I need to let you know who I am. My name is Rina Hicks. I am the operations director at FIDA Investment Bank, and I'm the host of ISIFA Investment Show, where we showcase different investment opportunities and help you understand how you can take advantage of them, and also introduce you to professionals that you can reach out to. Ladies and gentlemen, today on the show I have Eric Musau. Eric Musau is the head of research at Standard Investment Bank. He's an investment banker and has years and years of experience in research, in stockbroking as well. And I'm so excited to have him on the show today. Karibu sana, Eric.
Thank you very much, Rina.
Yeah.
It's a pleasure.
It's lovely to have you here, and I'm looking forward to learning a lot more about Forex. So, but before we dive into that, perhaps you can just tell us a little bit about yourself and what you do day to day.
Thank you very much. I've been in the industry for about 15 years, actually over 15 years. I was also in commercial banking for a few years before I joined investment banking. So what I do, mostly analysis. So I analyze equity markets and fixed income markets, primarily Kenya. Depending on transactions which come to our institution, we're able to participate in the ones that require the support of the research department. And from time to time, depending on the assignments which might be given to me by the board, then I'm able to run with those as well. Yeah. Fantastic.
Thank you. So what is Forex trading? I mean, a lot of people see this when you're browsing online. There's all these ads about, trade with us, open an account, it's easy. What is Forex trading?
Maybe I'll take it maybe at the very basics in terms of how foreign exchange really relates at the economic level. And when you think about when you go to a commercial bank and you're looking at import, exports kind of trade, you want to trade with another country in a different country, which has a different currency, so the settlement is a different currency compared to your home currency.
Yeah.
And at that point, the commercial banks are able to allow you to exchange your currency for another. And that's one of the basic elements of foreign currency at the very basic level, which was quite old and has happened for quite a number of years. The other level, of course, if you want to travel, you go to a foreign exchange bureau and you are literally exchanging physical cash of one currency to another currency. And so that's the other level of what the foreign exchange bureaus come in. So in the late 1990s, with the advent of internet, you now had liquidity providers, so dealers. So on top of banks, you now have money being exchanged, because at the end of the day, commercial banks need to square their positions, and at that point, they probably need to sell some of the currency depending on how much volumes they've received in the bank, and they need to have a particular position. So they trade with other institutions to ensure that they maintain the positions that they need to maintain at the end of the day.
So before you move on,
Yes.
when you say they need to square their positions,
Yes.
is it from a regulatory perspective? Maybe you can just sort of explain what
yes,
that means.
from a regulatory perspective and also from a capital perspective, and depending on whether they want to maintain a particular amount of dollars. So it may well be that a particular bank, for example, needs to just keep a maximum of $10 million, so that it started with $10 million at the beginning of the day, but because of the people coming into the bank and trading and buying and selling, they end up with maybe $30 million. So this excess of $20 million, they need to trade with other players in the market who might have a shortage, and it may well be that in the other currencies they're also short. So at the end of the day is to try and ensure that they have this position covered, and so that for the next day they start in the same position as they started initially.
Okay.
Yeah.
Okay. So sorry, you were explaining about the market, how you got the
Yes.
banks, there's people who need Forex when they're traveling.
Yes.
Yeah.
So now we get into these pop-ups you get on the internet, and essentially, on top of the banks, you now have with the internet, now people can speculate on currencies. With this liquidity and big institutions trading, in the 1990s, you now had the retail market being able to be mobilized by brokers or dealers. So they're able to get retail investors and then be able to participate with them. So with technology, it means a retail investor can actually trade directly into these markets and buy and sell currency. But the difference with the other component of foreign exchange market is that this is primarily speculative.
Okay.
And they trade in what is called contracts for difference. So they really don't trade the underlying currency, but the idea is to make a profit out of the price changes of the different currencies. And this is an important component of markets. It's speculative, but important market that just enhances overall liquidity and price discovery.
Okay.
In the foreign exchange market.
Yeah. So which is the market I participated in several years ago. I have traded in Forex. And my experience was not very nice. In fact, I was looking at some statistics a few days ago, and I saw that 60% of the people, retailers, who participate in this market lose more money than they make. And I was like, then why should we bother investing in, is it even an investment? I don't know, because we're speculating. So maybe you can explain what kind of investor would you encourage to participate in Forex trading and why?
So it's a complex market as you might imagine, and in fact there's actually specific qualifications that one goes through to really be able to understand this market. There are, SCI financial markets is one of the qualifications that treasury teams normally go through to be able to really understand that environment of currencies, derivatives, money markets, and so forth. So generally, it's even though it's technical trading, you need a very good grounding in terms of understanding to be able to successfully trade the markets, because there's a fundamental analysis component that is required, being able to understand economies. And of course, so there's a short-term element which is technical, which might be about news. So depending on how the news is moving, if the news is positive, it goes in favor of a particular currency. If the news is negative, it goes against that currency. And there's a longer-term element when you consider around inflation, GDP growth, employment numbers. So quite a number of elements are required. So it's usually not as simple. But what brokers do is to try and provide the tools on their websites to try and encourage those who feel sufficiently motivated to go in, read, and try and participate in this market.
Okay. Yeah. So currently how it works is you have to know what's happening in these markets that you're trading in. So if you're trading in Euro USD or Japanese Yen USD, I have to know what's happening in Japan, what announcements are coming, what expectations of interest rates and inflation rates and employment rates are, and interpret that and be able to decide whether I'm going to buy or sell.
Yes.
That's what you're saying.
Yes.
So maybe you can just sort of explain, how does it work, and how do the currency pairs, what are currency pairs? First of all, let's just start there, because there's people who are wondering, why am I saying Euro USD? So you just buy the Euro and then you sell it, you know. And when I'm buying Euro USD, what am I doing? Just sort of so that someone understands how that works.
So at the end of the day, let's say you're trading Euro USD. It means you're looking at maybe the countries which use the Euro, which is primarily the European Union, and then you're looking at the US market, and you're looking at the exchange rate, how that exchange rate between the two currencies is going to move.
Yeah.
So, and just to actually encourage you that you don't need to know everything about the world. In fact, even dealers specialize in specific markets.
Oh, I see.
You have dealers who specialize in maybe the Japanese currency against certain pairs, against it, because otherwise the information becomes just too much, and you may not just be able to get the relevant detail that is required to trade successfully. So those currency pairs is, for example, if you're looking at Euro USD, it's that pair being able to move from Euro USD or Euro Japanese yen or any other currency across the world which is sufficiently liquid and is allowable for trading.
So if I'm buying Euro USD, for example, what are my expectations? That the Euro will go up?
So it depends. If for example, you feel like interest rates in the US are rising, it may well mean that that the USD will strengthen. So whatever positions you take, if that's really your only determinant, then primarily you should be trading in favor of ending up with more USD. That's primarily, and that's been a major driver in the last couple of months, especially with the Fed saying that they're going to raise interest rates. So a lot of the USD has been strengthened against most currencies, and even against the Kenya shilling.
That's true.
Yeah, of course, under the Kenyan regulations, the Kenya currency pair is not offered, so you can't speculate against the Kenya shilling, but you can do it against any other currency globally.
You can use the USD with any other currency pair, but not Kenya shilling.
Yes, you can use any other. You can do any currency pair except with the Kenya shilling. I think it was exempt to prevent speculation on the Kenya shilling specifically.
Okay.
Yeah.
Okay. Okay, that's really interesting. So for somebody who's considering starting today, I'm like, okay, I don't really know much, but I want to take some risk. I've seen guys online saying, from $250, I've made $10,000. So how can I participate in this market? Where do I start? What should my expectations be? Sorry, I've asked so many questions, but where do I start? Let's start there.
There are a number of brokers.
Okay.
So I think 6 of them.
Yes,
two just got their licenses, I think, last year.
Yeah.
So I think there are 4 came. So you have, I think, FXPesa, that was EGM, have Scope Markets, Pepperstone, Xfinity,
like Windsor,
HFM, Windsor as well came. So 6 of them are licensed by the Capital Markets Authority in Kenya. And so it's advisable to look at those as a starting point. They all have websites, because that's really where the primary venue of being able to trade. You're able to go through the KYC, look at the materials that they offer, and really that's the starting point for a Kenyan who wants to invest.
Okay. So when you're looking at the 6, how do you determine I'll go with this one as opposed to the other? What are some of the key areas one should seek to understand and questions they should ask?
So the quality of the material that is in place, ease of use of the platform. Most of them have pretty easy to use platforms because they're targeting retail investors primarily. And of course, once you get into the details of whatever currency pair you're targeting, they might put different spreads on each. So it may well be that one broker might have better spreads on particular instruments. Maybe they have a partner who is able to offer them better spreads compared to another broker. So that can help. But ultimately, we still also have to just do your own research on exactly what kind of trades you want to take. and what area you're going to specialize as you get into this journey. I think an important element, which especially when you mention about putting in $250 and making $2,000, leverage is a key risk. And so it can cut both ways. So you can
maybe you can explain what that is.
When you're trading in the foreign exchange market, you can actually trade more with more money than you actually have. So if you leverage 10 times, your $250 would be $2,500.
Yeah.
I think you can leverage to even 40 times.
Can you?
Yes.
There's no limit? I thought the limit would be like 10 times.
No, in fact, I think the limit is a lot higher. I think it's like 400. It's a very high limit.
Wow.
So you have to be careful in the limits you set, and because if you put a very high leverage, of course the chance of you getting a high return, the chance of you multiplying your money is quite high, but that also means you can lose your money quite quickly. So that the use of leverage is an important element that one has to be aware of very early on when they are trading this either currency pairs, and these platforms allow also for trade of indices, commodities, and so forth, and stocks. So one has to really watch carefully the use of leverage. The system also allows you to set stop losses, so that if you're making a particular, if you're not comfortable with the loss beyond a particular point, then the system cuts off the trade, essentially limiting the amount of loss that you can make. And also there's a take profit element, because also sometimes you want, if the price reaches a particular point, you just take those profits and you've booked them. So depending on the way you do it, that's really important. For you to really successfully do it, you have to watch these metrics quite carefully.
Okay. What would you recommend as a leverage amount that is not too risky? Is it 4 times? Is it 10 times? What would your recommendation be?
It depends on what your total portfolio looks like.
Okay.
Because it may well be that the portion you take to the foreign exchange market is a small proportion of your total portfolio. So you, and then out of that now you decide, okay, how much risk do I want to take with this money, and how do I set the limits of losses? So at the end of the day, you need to look at your portfolio as a whole, and then look at the foreign exchange market or as an alternative portfolio, which is a diversification of your total portfolio. So it may well be that you're taking 20-30% of your portfolio and putting it in this alternative asset. Depending on your scale, you might even want a much smaller exposure of your total portfolio. In the FX market may well be like 5% of the total. So that's primarily the main element that you could use. If you feel you don't have the expertise, under the regulations there are also other players, and that's why, for example, we come in as money managers, and we're able to actually manage such portfolios. So we are regulated to manage people's portfolios.
Yeah, so that then somebody doesn't have to go through the process of making those decisions themselves.
That agonizing decision of trying to figure out what's happening in Japan or US, you just drop it to us, and we have a team that is able to run through with that, and all we do, you judge us based on the performance on a quarterly basis. So you just let us do the daily work, and you judge us on a quarterly basis.
Okay.
Yeah.
For those who are a little bit more seasoned, I've seen that you can actually trade in other markets, not just in Kenya. Like, you don't have to use a Kenyan online broker. You can use one from anywhere in the world. And when you look at them and you do your research, you find that some of the brokers outside of the country offer better rates. I think you're calling them better spreads, between on the different trades, I mean. So why would you, or is there a reason that you would recommend a Kenyan online broker as opposed to any other out there?
Yeah, in fact, the reason these regulations came in the first place was because people lost a lot of money trading with brokers out there who when the money was lost, you couldn't really even trace where the money was. I mean, if a broker collapsed, for example, there was no recourse of a Kenyan investor to be able to get their money back. Because it's one thing to lose your money, trading on the instrument, but quite another just losing your money, without trading, maybe because the broker has collapsed. So under the Kenyan regulations, the brokers who are licensed within Kenya, they have custody arrangements. So there's the way they have to separate their own their own cash versus the cash for the clients. So they are better monitored, you would say, from that perspective, almost similar to what the stock brokerage is, so that you have the money, the client money kept separate from the operational money of an institution. So if a brokerage collapses, for example, your shares remain safe. So that it's a similar arrangement, and it's the level of risk, especially if you need to get your money in or get your money out, because it might be easy to send money out there. I don't know, you might have sent it whichever country, but how are you sure you're going to get your money back even if you make a profit in the system? So by using the Kenyan entities, they essentially reduce that risk, and you ensure that you have a better focus and a better likelihood of being able to withdraw your money.
Yeah. And I guess there's the convenience of also using M-Pesa.
Yes, you can use M-Pesa. So literally, in fact, even on boarding, you can just literally do it in minutes. Send money, you start trading within a very short time. If you need to withdraw the money, the same process. Within minutes, you have your money back into your wallet. Or into your bank account, whichever way you look at it. It's a very liquid product because there's almost no shortage of buying and selling. Because when you say it's a very large market, one of the key advantages, you want to go into the market and say, oh, we can't get anyone selling dollars in the market. It's there 24 hours, and it provides a lot of liquidity to investors.
I saw some statistics that Kenya has approximately, I think it said over 70,000 dealers in Forex or traders. And I was like, wow, those are many. And I was like, okay, so if somebody wants to get into this market, what would you say is a reasonable amount of money to start off with, to start trading?
If you're trading with a broker, you can start with any minimum. I think you can even go as low as 100 shillings. So the threshold is quite low, especially because you're using technology and the internet. So the threshold is quite low. And
I guess because of the issue of leverage. So if you put in 100, you can get 1,000 or 100,000
to almost trade with your almost 40,000. So. But of course, you can see if you just have a small percentage, it goes against you, your 100 is wiped out. And I think the thought is that if Kenyans are really very, they also bet quite a lot. I think the betting market in Kenya is over $1 billion. So you would imagine the same risk appetite might well apply on the foreign exchange market. But to really do it successfully, you still have to go through a lot of detail and education. Financial literacy is really critical for that space. Of course, if you don't have that capability and time, then that's why you come to money managers such as ourselves and through the Mansa product.
So just to understand just a little bit more, when you take leverage, let's say I put 1,000 shillings and then I take leverage and I can get 10,000 shillings from my 1,000 shillings. So I'm now trading 10,000 shillings.
Yes.
If the market moves down, how does it sort of, will I lose more than I have put in?
So the system automatically sets that once ideally if you move in a way that we lose your entire amount, the system automatically cuts off that trade.
So the maximum I can lose is what I've put in?
It's what you've put in, yes. So you get cut off and your amount, because ideally you're supposed to top up in order to continue the trade. Because essentially the trade requires more money to be put in for you to continue that particular trade. Otherwise, if you don't top up, the system cuts you. But essentially for most trade, it just cuts you off automatically.
Okay. So this market is 24 hours, and when you go to sleep, it's still trading and so on. And it can get a bit overwhelming, wondering, okay, I've put in a position, I'm going to bed. what do I do? Because I might get wiped out while I'm sleeping, or the market might go up and I might not be able to take profits when I need to. What do traders do so that then, even when they're asleep, they can still trade?
I mean, there are the longer term trades, which you bet on, let's say, gold over 3, 4, 5 months. This is the exposure, and of course you need to calculate the cost of holding that exposure of trade over a long period of time. Then there's the short-term trades, which for you as a trader, you also have to monitor the market. When is the market likely to move adversely or positively, against you? And for that particular case, the idea is to be ready around that time. Of course, you can still set limits, so those limits allow you to automatically cut you off should things go adversely. So it's that, but they're usually critical times, when specific data is coming out globally, if it's payroll data or the Fed is announcing interest rates. So at that particular time, you might see traders really very keen in their screens just to be able to monitor if they need to enter trades or exit trades. There's surprise movements. So there are those critical periods where you need to be alert, and then there are periods where probably nothing is going to happen, and you just set the system almost on autopilot, and you just monitor whatever time. Or you can have alternating. You can some traders working in the morning, others in the evening, so you're able to do a lot more if you need really an eye. But you also have the systems are really critical in this. Yeah.
It sounds so hectic. And so if somebody wants to come and find out a bit more about how they can invest by having a licensed manager sort of manage their account, how can they reach you?
Well, they just go directly to our website, I think www.sib.co.ke, and there's a section on Mansa X. So that's the product name under the money manager license that we have, and they're able to get the information there. We're at ICA building, 4th floor. We have a team of sales teams who are able to take you through the details. Yeah, or just go through our call center. Our call center lines are also on the website, so somebody's able to just reach us through a variety of means. We also have the other products, as an investment bank.
Yeah.
But yeah, for the foreign exchange products under management, that's our main route. Yeah.
Okay, so before I let you go, I mean, you're a research analyst, you look at the markets and you know what's going on. I can't let you go before I ask you this question.
Yes.
We're in an election year. In fact, the other day I heard a Dr. Tedros of the WHO sort of saying, I know Omicron has come, you guys might think it's the last one, but it may not necessarily be the last variant of COVID-19. Please be prepared, we might have another variant coming in, and so the end may not necessarily be near. Okay, so given all those dynamics and what's happening with the markets and interest rates in the US going up and elections in Kenya, what would you recommend for somebody wondering what to do with their money this year to start thinking through?
I think for the Kenyan market, we actually still quite positive, especially when you consider the valuations that we have in the market. We think there's a bit of fatigue around COVID, and COVID has been with us now 2 years, and our sense is that this year might still be reasonably robust. So coming out of a period of low growth, we don't see inflation being a major concern. And the modeling we've done, we think there's a ceiling of, we don't think inflation is going to go beyond 8%. So the external drivers, especially global markets, that they're having very high inflation rates. I mean, having inflation rates of 7% for these developed countries is really a major risk.
High, yeah.
Whereas for countries like us, we have inflation mostly under control. So that on the currency front, that might be a negative, and the question is whether there'll be a response on the local front. But the valuations are looking reasonable, so there's still room in the local markets. of course, depending on the type of stocks, the ones which have foreign investors playing heavily might be negatively affected. But generally, we feel confident that the election will come and go. Of course, there's a lot of push and pull, and I think we've not seen the last of it. I think the next couple of months, we're going to see a lot of activity. But compared with previous years, we have stronger institutions. I think the level of politics will always be there in Kenya, and I think for us is to try and reassure investors that the institutions are in place to really keep the politicians in check, and that the politics can go on, and business can still work in parallel. Yeah.
So not to panic, to continue to invest through the cycle, because you see, as you're saying, there's still value.
There's still value, and we've seen even in other years, election years, or in years when we've had referendums. We did a report last year, and we actually noticed that election years aren't necessarily negative. In fact, we've had years where election years. In fact, the majority of the years we've had a good performance in election years. So it's only after the election, depending on whether the outcome was positive or negative, that we start seeing kind of an effect of the outcome. So our sense is that this year will be no different, and we are more in favor that we're going to see a positive outcome. Although the global outlook is what could be a major driver in the local market because of the participation of foreign investors in our market.
Yeah. Wow, interesting. Thank you so much, Eric. I really appreciate you taking the time to come and educate us more on Forex.
Thank you, it's a
on
pleasure.
Forex trading. Yeah. So there you have it, guys. At least you know where to start when you're thinking about investing in Forex trading. As Eric says, you have to get educated. Financial literacy is so important. You can't just get into the market and start trading Forex. You need to understand what you're doing and what the options are. So the information is all out there, as he said. And I want you to subscribe to this channel, because we shall continue to bring a lot more content on investment products that you can consider in Kenya. My name is Rina Hicks, and you have been watching the Isifa Investment Show. Have a wonderful time. Bye-bye.